Welcome to Finance in Review. It was a quietly lower day for the broad market. The S&P 500 slipped about 0.5%, with most sectors in the red and only energy climbing as oil rose. Market volatility ticked up from a low base, but nothing about the averages was dramatic. The real action was in individual names. One semiconductor materials maker soared on booming demand for AI hardware, while a fast-growing retailer tumbled after a cautious profit preview. We have both stories, and a look back at 5 years of each. Nothing here is investment advice, just a clear look at the trading day. Here are the index movements for the day. But let's take a look at the big movers on the day. First up, AXT, ticker AXTI, a maker of compound-semiconductor substrates used in optical chips and high-speed lasers. Today the stock rose 17.6%, a quiet day by this stock's own standards. This is a name that has swung far harder than that, and we will get to those days. The gain came after reports pointed to looming price increases for indium-phosphide, a substrate AXT is one of the world's largest producers of. Demand for that material has been climbing as AI data centers build out high-speed optical networks. The company itself issued no filing or statement, so the move rested on those industry reports rather than any company disclosure. Let's take a look back a few years to examine other price fluctuations in this stock. July 2022, up almost 25%. The company reported second quarter revenue of about $39 million, and gross margin jumped to over 39%. Profit came in well ahead of the prior year, and the stock surged. October 2022, down 21%. The company warned that third quarter revenue would land near $34 to $35 million, below its earlier guidance of $39 to $41 million. It pointed to weaker demand in China, and the stock dropped. February 2023, down 17%. Fourth quarter revenue fell to about $27 million, from $35 million the quarter before, and gross margin narrowed sharply. The slowdown was deepening, and shares fell again. February 2024, up 69%, its biggest single day of the whole ride. Fourth quarter revenue rose 18% from the prior quarter, and gross margin recovered from single digits. Management said orders for indium phosphide were rising for artificial intelligence and fiber optics, and the stock exploded higher. February 2025, down 31%. The company capped a year of 31% revenue growth, but gross margin slipped back toward 17% as costs climbed. Investors focused on the thinner margins, and the stock tumbled. And that brings us back to today. But the day cut both ways. Our second story went the other direction. Next up, MINISO, ticker MNSO. MINISO, the Chinese variety retailer behind its lifestyle stores and the top toy brand. Today, the stock fell 8.8%, a quiet day by this stock's own standards. Before the open, the company pre-announced results for the first half of 2026. Revenue is set to grow about 22% to roughly 11.5 billion yuan, but adjusted profit, stripping out currency swings, is expected to slip about 1 to 3% from a year earlier. Headline profits still rose, but mostly on a one-time gain from an artificial intelligence investment, not the core retail business. Higher store spending and rising finance costs squeezed margins, and investors sold the stock. Let's take a look back at this one too. March 2022, down 21%. There was no company news that day. MINISO shares fell in a broad sell-off across US-listed Chinese companies, a session when the S&P 500 also dropped more than 1%. The move reflected the market, not the business. November 2022, up 29%. The company reported quarterly profit up more than 160% from a year earlier, with gross margin at a record. Its store count topped 5,000, and the shares jumped. September 2024. Down 17%. MINISO announced it would spend about 6.3 billion yuan to buy a 29% stake in Yonghui Superstores, a Chinese grocery chain. The deal pushed it well outside its core retail business, and the shares fell on the news. May 2025. Down 18%. Quarterly revenue grew almost 19%, but profit fell from a year earlier as financing costs from the Yonghui deal and other charges weighed on the bottom line. The market focused on the shrinking profit, and shares dropped. August 2025. Up 20%. Quarterly revenue rose more than 23%, above the company's own guidance, and same-store sales turned positive again. Its top toy brand nearly doubled its revenue, and the stock rallied. And we are back to today once more. Beyond our two featured stories, here are the rest of the day's biggest movers. That's the market close for today. Thanks for watching Finance in Review. And remember, this is information, not investment advice.